bank. That is a temporary basis, some cash provision or money fund is provided. Next, what is the CRR? Very important. See friends, CRR stands for cash reserve ratio. See, as per the section 42 of I, remember section 42I of RBI Act 1934. You have to remember section. The CRR is the amount of fund that scheduled commercial banks are required to be maintained with RBI. See here line, how the questions are framed in your examination. See, scheduled commercial banks are required to maintain with RBI, that is CRR. That how they can frame a question, which of the following banks are required to maintain CRR with RBI? Option A, SCB. Option B, cooperative bank. Option C, foreign banks. Option D, private banks. So answer should be scheduled commercial banks, right? That means the banks which are categorized under the scheduled commercial banks are required to maintain with RBI. So friends, you might have seen the tagline under any bank. For example, like any cooperative bank or any bank, the tagline is scheduled bank of India. That is a scheduled bank according to RBI Act 1934. So it is in a bracket they are generally writing scheduled bank. Why they are writing scheduled bank? Because scheduled bank are more secure. Why they are more secure? Because they are required to maintain some cash with the RBI. That's why scheduled commercial banks are more secure. That's why many banks are using in after their name scheduled commercial bank, right? So that is the reason why scheduled commercial banks are safe as compared to other banks. Okay, next, cash reserve ratio, CRR is nothing but it is a mandatory deposit held by banks with the central bank. That means some cash cash or funds are required to be kept with the RBI. That is the basic CRR. CRR varies, generally CRR varies depending on the monetary policy of the RBI. So you should remember what is the CRR currently at the time of your examination. You should remember what is the CRR percentage. Next is the SLR, that is the statutory liquidity ratio. What is SLR? SLR is also somehow similar to CRR, but here what is the difference? In case of CRR, you need to remember that you need to keep in the form of cash or funds, whereas in case of statutory liquidity ratio, you need to keep with the RBI in the form of securities. That is the main difference, right? Some funds you need to keep with RBI in the form of securities. That is the important, mainly government securities. So remember here, maximum limit for the SLR, that is statutory liquidity ratio, is the 40%. That may be a framing of question on that point. So that is basic difference. Don't need to go in detail how it is only held in the form of securities, only in the government securities, and CRR in the form of cash. Okay, that's it. Next is the liquidity and debt market. What is liquidity and debt market, that we have already learned. Now we are seeing the second, that is the capital market regulator. That in second part we are now see liquidity and debt market, mainly that are just remember that are mainly controlled by the SEBI, and headquarter of SEBI is at Mumbai. Just remember that, no need to remember anything. Now what is the stock exchanges? That we all know what is stock exchanges, what they are doing. For example, BSE and NSE are the best example of the stock exchanges, right? What they are doing, they are selling and purchasing security on behalf of investor. That we all know basic things. Now what is brokers? See, remember friends, what is brokers? Broker is actually a intermediator. The name itself, it is a broker, is the intermediator. And remember here, the brokers are approved by the capital market regulator. That means one liner question, brokers are approved by SEBI. Right? And that can operate on the stock exchange. Oh, that's okay. See, best example for the broker is the Harshad Mehta, friends. You can remember the Harshad Mehta scam, that is 1992 scam. You might have seen the serial on the Sony, that is Harshad Mehta. So one interesting story, friends, how Harshad Mehta scam happened. Actually, Harshad Mehta is taking money from banks and investing in the market, and also when you get a return from that money, that will also take money from another bank, and he is routing money, taking money from bank A, then bank B, bank C. In 1992, that scam was very popularized. And Dena Bank MD has also committed suicide. due to the Harshad Mehta scam in 1992. So okay, that's fine. What is broker? You have understand. Now what is the equity and debt raiser? What is equity and debt raiser? Basically they are raising the money through the equity and debts. The name itself, it is a self-explanatory. Next, what is the investment banker? Very important. See, investment banker is also called as the merchant banker. Remember, you have to remember, investment banker is also called as the merchant banker. See friends, here basically in the history of India, traditionally a merchant, that means a business person. So business persons, for them the banks are started, that is called as the merchant bank traditionally, but right now meaning is completely different. See friends, basically what the merchant or investment banks do, they are providing the advisory services, and also they are also helping in the merger and acquisition. So they are licensed by the capital market regulator. Remember friends, remember one very important, who give license to the merchant banks and the investment banker? You may think that bank, that means RBI is the answer, but answer is SEBI. So how the questions are framing, you should understand here. So it is very important how the question can frame, how the questions are framing from between the lines, that is important. So I am telling you how the question can be framed. Who give license to the investment banks or merchant bank? You will say bank, that means RBI, but the answer is SEBI. Remember. So I have covered your one important MCQ here. So remember friends, important thing, as name it is a bank, but it is not actually a bank, right? They do not provide any financial services to the public. Remember, merchant bank or investment banks do not provide any financial services. Okay, and license is given by the SEBI, because we are saying the capital regulator. Now next, what is the foreign institutional investor? What is the foreign institutional investor? What is that? Is the FII, foreign institutional investor. See friends, here FII, it is also called as the FPI, that is foreign portfolio investor. FII also called as the FPI. See, what is FII? You might have heard what the foreign institutional investor. See here, FII are the foreign based fund authorized by the capital market regulator to invest in the Indian equity. That means, what is actually FII? See, foreign investor is investing in the Indian company. That is nothing but the foreign institutional investor. For example, Abu Dhabi pension fund regulator is investing in the India. That we can say it is a FII. Who? Abu Dhabi pension fund regulator. But in case of so suppose Amazon is investing in India, it is not FDI, it is not a FII, it is the FDI, because it is a company, and it is an investor, it is an institutional investor, because it is a fund regulator. That is the basic difference between the foreign institutional investor and the FDI, foreign direct investment. So remember, what is the foreign institutional investor? Next is the depository. Very simple. What is the depository? Actually, depository are nothing but the that are hold the security in the form of demat. That is dematerialized form. That what is dematerialized means not having any material. That means in the electronic form. That is not in the physical form. That is nothing but the demat form. That means we know how our shares are hold. In simply on screen we can see in the mobile how our how much shares we are holding. That means we don't have any physical form of shares or paper like that, right? It is just a demat form, that is dematerialized form. That is basic you have to remember. Don't remember anything. That is, for example of depository is the demat account, you can easily remember. And how that depositories are regulated? These are again regulated by the SEBI, that is the capital market regulator. Next, see here, what is the mutual funds? Mutual funds are also regulated by the SEBI. Remember, we are seeing all details about the SEBI. So mutual funds are also regulated by the SEBI. See friends, mutual funds are regulated by the SEBI. Mutual fund is a form of collective investment. It is nothing but the collective investment that pulls money from various investors and invests in the stocks, debts and other securities. That we all know mutual funds are subjected to risk. But remember, important line is here. It is a very less risky investment option for the individual investor. That means Remember friends, that may ask one liner true or false. Mutual funds are risky investment option for the individual investor. That means you might have heard the line mutual funds are subjected to risk, so definitely you will make answer false. But see friends, mutual fund is a less risky investment option for individual investor, remember. So definitely you will do a wrong thing and then that in that exam, and you will say the exam was very easy, but how the question are framing, see here. That means here you have to remember the line. What you think is exactly opposite, that's why you are losing the marks. Okay, move to the next. So what is the mutual fund? Basic we all know. Remember, just the mutual funds are regulated by the SEBI. Nothing more you need to remember here. Next is the registrars. What is registrars? Very important. See, in your school days you might have heard a word about the registrar. There was always one registrar for the school, colleges, right, or the universities, right. So the same work is done here, the same concept is here. What the registrar in the college do, actually he is mainly used to do the record keeping work is done, right. uh, right. So here is also in the capital market one registrars are there. What are the registrars? Registrars are not here the individual person. In a school or college there was a one individual person is called as registrars, but here registrars are the institution or the trust, that are the registrars. For example, for every big company there is one registrars. For Reliance Industries, the company named Curvy Computer Share Private Limited is the registrar, acting as a registrar for the Reliance Industry. That means what registrar is, the work is keep the record of all share, debenture, how the share price is, who is purchasing share, how it is being purchased, how to process that all work. That means the keeping the record is done by the registrars, and registrars are not the individual person, it is a company, it is the institution or the trust. Okay, now we come to know what is registrar. Now now third regulator, that is the insurance regulator. Who is the insurance regulator? IRDA, that is the Insurance Regulatory and Development Authority, that is the IRDA. Remember friends, IRDA headquarters is at Hyderabad, and IRDA is formed in the 1999. So basic you know what is the you just remember who regulate the insurance sector, the IRDA. Hyderabad is the headquarter and they formed in 1999. That's it. Next is the what is the MCX, that is the multi commodity exchange. So remember friends, MCX stands for the multi commodity exchange of India, and it is a headquarter, that is it is based in Mumbai. So it is basic. Remember also here it is India's first exchange, it is the India's first exchange. They may give option, they may give question, what is the India's first listed exchange? First BCX, second NSE, third MCX. You should remember MCX is the answer. So how the question is framed? So see friends, next remember it is started operation in 2003, right. So almost 15 years back they have started operation. 15 almost 17 18 years back, 17 years back we can say. Next they operate with a regulatory framework of the Forward Contract Regulation Act 1952. So this line you have to remember. How the question are framing, see here. MCX are regulated by the regulatory framework of the Forward Contract Regulation Act 1952. That you have to remember. The question can be framed from that line. Next, what is MCX basically? See friends, MCX, what actually MCX is doing? They are doing the trading of the commodity. What commodity are they are trading? Like a metal, like gold, silver, then your zinc, different crude oil. That type of commodity exchange is the trading is done at the MCX. And basically, how they are dealing in the forward. For example, buying a wheat before the harvesting, that is the best example for the MCX forward trading. Now so we have almost completed all important topics in the very first unit of your JAIIB principal paper. So in the basic, let's sum up what is the summary they have given. Just remember, they have given that RBI is the central bank to the Indian banking industry, and it does the two important functions like monetary control and the supervision. Along with that, CB is a capital market regulator, IRDA is the insurance market regulator. So in this way we have completed our very first unit in the very good concept with we have learned a lot. Now we will see some questions, how the questions are framed. See, check your progress. Very first, RBI has direct supervision over depositories or a mutual fund. Is the RBI has direct control over the mutual fund and depository? No. Mutual funds are subject to risk. That means they are controlled by SEBI. They are controlled and supervised by SEBI. Remember, SEBI is the main supervisory for the mutual fund and depositories. Depositories means like your share market, that is your demat accounts. Next, money control is exercised through CRR and SLR. Is the money control is exercised through CLR and SLR? Yes. How? See friends, CLR and SLR, they, see one important I want to explain you. See here how SLR and CLR help in to control the inflation. See, if a CRR is a 4% and a SLR is at 8%, what are if in the market inflation is high, that means price of the food and all the daily needs are very high. That times why inflation increases? If there is a money, that is a cash in the market is more, that means there will be inflation. So to control the inflation, what RBI does, RBI increases the CRR and the SLR. So due to that, the money with the banks or in the market will be absorbed by the RBI. So CRR, SLR increased to control the inflation. Remember, to control the inflation. And CRR, SLR if decreased, there will be more supply in the market, more supply of money in the market or to the banks, right? So remember that two lines, how SLR and CRR are important for the control of the inflation. If it is increased, then inflation will decrease, right? If SLR and CLR is decreased, then inflation may go high. So this is the basic. See, current, you can remember easily. See, what is the current situation right now? What is the current situation? CRR, SLR are at the bottom, where like around 3.5 is CRR. That means almost it is a very low. So why? Due to this, the CPI index is increasing. That means your prices are increasing. That's why your DA allowance is increasing in banks. Our DA is increasing quarterly basis, right? So what we think that our DA has been increased, that means we will get more salary. But actually DA is increased due to the rise in the prices, due to the rise in the inflation. So how they are linked, you should know. So okay friends, now we have to see the next question. What is the monetary control? It is the monetary control is exercised by the CRR and SLR. That is true. Primary dealers are mainly dealing in the share mutual fund units. Remember my words. When you should hear the word primary dealer, you should know that the government security, not the share and mutual fund. So this is false. Next, issue and servicing of the government debt is managed by the commercial bank. Is it managed by the commercial bank? No, it is managed by the RBI, right? So it is false. The decrease in the statutory liquidity ratio contract the credit creation. I have already told you, if SLR is decreased, then money in the market will be increased, because less cash will be kept with RBI. So money supply in the market will increase. So credit will be increased. How money supply increase? Through credit. So credit will be increased. So contract, no, it is expanding. So next, some we have to fill some fill in the blanks. Depositors hold securities in digest form, demat form, that we have already learned. Dematerialized account. Next is the CRR ratio, is the dash deposit to be held by bank with RBI. It is CRR is mandatory. Remember, CRR is mandatory. Dash provide clearing house facility. Who provide the clearing house facility for the payment and security? Who provide the clearing house facility? See, stock exchanges. Stock exchanges provide the clearing house facility for the payment and security. Security means only you have to remember stock exchange when there is word of securities. See, important, very important. Urban cooperative banks are controlled by who? Control under urban cooperative banks. I have already explained you. Urban cooperative banks are controlled by RBI and the state government. RBI and the state government. Next, leasing hire purchase and bill discounting. I have already told you, remember these three words. When you heard three words, leasing, hire purchase and discounting, you should remember that NBFC. Answer is the NBFC, because you might have recently heard one name, that is IL and FS crisis. IL and FS crisis, that means how the IL and FS crisis was supposed to happen in India, how government intervened, and how that NBFC is important. See friends, that NBFCs are borrowing money from the public and different bonds, and that invested in the infrastructure. So how NBFCs are important to development of the country, because that are important to develop in the country. They are investing in the all infrastructure, major investment. So that's why the government intervened and saved the INFS, that is the biggest NBFC in our India. Next, some terminal questions they have given, like distinguish between the banks and NBFC. How banks are different from NBFC, that we have already learned. That is NBFCs are not allowed to do the financial transactions. Banks are doing that, right? The insurance on the deposit is covered in bank. NBFC, there is no insurance on deposit. If it is goes bankrupt, then you will lose all money in the NBFC. That is the basic difference. We can write a short note on Indian financial system that we have all learned. Elucidate the role of RBI, that is the monetary control and the supervisory role. Next is the services provided. What are the services provided by the merchant bank? It also help in the what merchant bank do? It help in the acquisition and the merger. Okay, next is the write a brief role of the what is the IRDA is doing. IRDA is controlling the insurance sector business. Insurance, right? Name itself, it is the insurance. So it is so if you want to launch any plan, if ICICI insurance company, that is ICICI Prudential Insurance, want to launch any plan, that company must take permission from the IRDA before the launch of any scheme. So that was all about our very first unit of the JAIIB and the principle and practices of the banking. So friends, I want to hear what is your opinion about my lectures, how I am teaching. Is there any need of a change in the teaching method? So friends, thank you, and don't forget to subscribe and share. Very important function role of your is the, as RBI's role is monetary control and supervisory control. Your role is the share maximum. You have to share our video to maximum, so that many of our colleague will be benefited. So thank you friends, and don't forget to subscribe and share Banker Zone. Thank you friends.